Here are today's top 6 crypto stories. Bitcoin ran to within $500 of 80,000, and the rejection cost leverage traders $475 million. 1. On Saturday, Bitcoin hit $79,500, the top of a 5-day run of roughly 30%. Then the door slammed. The price slipped about 3% back to the 77,000 area. And that small dip erased around $475 million in leveraged long positions, about $547 million across crypto in a single session. Here is how we got there. In mid-August, Bitcoin traded near 64,000. On August 19th, the SEC proposed its first crypto asset regulation. On the 20th, the White House pushed Congress on the Clarity Act, and Bitcoin topped 69,000. By Friday the 21st, it had printed its best week since March of 2023 at 77,800. Saturday brought the peak, 79,500, and the flush. Why did 3% do that much damage? Leverage, perpetual futures, let traders run positions at 50 to 100 times their money. At 100 times leverage, a 1% move is a wipeout. And at Saturday's peak, technical indicators were the most overbought since November of 2024. The market was a loaded spring. Here's the part that matters for the week ahead. The selling was leverage, not conviction. Spot buyers held, and as of this recording, Bitcoin sits near 77,100. The rally was spot. The flush was leverage. This week decides which one owns the tape. 2. The institutions did not blink. United States spot, Bitcoin, and Ether ETFs took in around $2.6 billion combined last week, the strongest week since October, with trading volume tripling. Friday alone brought $307 million into Bitcoin funds, $239 million of it into BlackRock's IBIT, plus $184 million into Ether funds. Leverage got flushed on Saturday. The allocators kept buying right up to the bell. 3. Zcash is a privacy coin the industry left for dead. This weekend, it hit $850, an 8-year high, with futures volume near $10 billion. The trigger was Friday's filing from Grayscale for the first United States Zcash ETF, ticker ZCH. An asset class crypto wrote off as being repriced in real time, and the wrapper doing it is the same one that carried Bitcoin to Wall Street. 4. Tether, the company behind the world's largest stablecoin, just lost its bet on becoming a miner. Its $120 million Bitcoin mining project in Uruguay collapsed over power contract disputes, according to Reuters. Look at the failure point. Not regulation, not prices. Electricity. Industrial mining now competes with AI data centers for the same scarce asset, and cheap power is winning every negotiation. 5. Term Finance, a decentralized lending protocol, was drained of about $8.5 million this weekend through a governance exploit. The attackers did not break the code. They captured the voting process that controls it. That is the third governance-style loss this quarter, and the uncomfortable lesson stands. You can audit a contract. Auditing a voter base is much harder. 6. Solana cut its mainnet slot time to 350 milliseconds, on the road to a 200 millisecond target. Slot time is the chain's heartbeat, the interval between blocks. Solana is selling speed to exchange-grade trading flow, and with Sol near $94, every millisecond it shaves is a pitch to the next market maker. Fear and greed flipped back to greed overnight. The ETF pipe is open, and leverage just took a $475 million haircut. That is crypto today. Here's today's question for you. When a 3% dip erases nearly $500 million in positions, is leverage the engine of this market, or the parasite feeding on it? Tell me your take in the comments. I read them. Blue pill. The flush was healthy. Spot buyers and ETFs absorbed the hit. The weak hands are gone, and the trend is intact. Red pill. The same leverage that built the 30% weak guarantees the flushes get bigger from here, and the tape is more fragile at 80,000 than it ever was at 64. 475 million is the number either way. The timeline keeps moving. We will see you in the next one.